Okay, I have one watcher. I don't know who that is, but I have one person. I'll see if I get any more. If not, it'll be just horrible. That's just I have 2 viewers. Let's see what happens. I'll give it a couple more minutes. We'll go from there. So is this it? I don't know. Hey, I guess I'm on. I guess it started at 9:10, not 9 o'clock. So, I mean, I won't wait any longer. I'll get going. I mean, if you have any questions, if not, I can go on a little rant. But I just want to see if you guys have any specific questions. And as we're on, maybe there'll be more going. And if this becomes successful, then I'll do it more. And I'm wondering if you guys can hear me okay. So I'll give it another couple minutes, and I will go from there. Okay, I never know if I'm too loud or not. Hit me with questions right now, and if not, I will go on my own little rant. So it's funny, if you buy the video stuff, so Caesar, I think I said it right, he wants to buy video tutorials. So if you want to buy different ones, there's STC, Kaplan, Notman, and Training Consultants and Past Perfect. If it's not one of those 5, don't go there, because I don't know anything about 80 Banker. Some people have some bad trouble with it. Training Consultants, like I tell everyone, if you can break out and just buy the videos, they're pretty good, because they just basically read from the book. The girl Tina's voice is kind of annoying, and she talks really slow. But if you, like I think I said on one of my videos, if you watch it on what do you call it, on double speed, it actually comes out about normal. I like STC too. They're pretty good, especially for this exam. Maybe for the top off, it's a little harder, but the STC stuff is solid. I kind of use that with most of my students, and they seem to work well. I can use any kind of topic, what they want. I can use any books, any vendors, but SDC seems to be pretty common. It's not super expensive. They cover everything they need to. And again, the SIE is more fact-based, so we're fine. And I tell everyone, if you're going to do STC, focus on the last 14 pages. Those are the best ones. Those 14 through 18, I think, last 4 chapters. Chapter 14 through 18 seems to be really solid, and it's almost like 40% of test. I don't know if that helps you. Now, I don't know how you all are studying for the exam, but again, let me go back and do this. Training consultants is fine. STC is fine. Not mean you cannot buy just the videos. Past Perfect is fine. The only problem with Past Perfect, they go a little too deep than they need to. And I don't know who the videos are. I don't know if it's Peter Gibowitz or Ed Floor doing the videos. But the books go heavy, heavy, heavy into the material, almost too much. And the thing is, if you know everything on Past Perfect, you're going to rock the test. And I agree, Mike. If you just do videos, you're going to be in trouble because there's a lot to it. There's a lot of information in this, and they go high level. They don't really go down too deep. Okay, so if you have other specific stuff on like actual topics and stuff, or even more vendor question, that's fine. Understand how I tell all my students to read. Basically, the first thing you do when you know you have to take this is just read. Just read straight through. Just read the book once, right through. Don't try to take a lot of notes. Don't go crazy on this, okay? Then maybe go through it a second time. Yeah, send me a question. That's good. Second time, what you do is you read it and then take questions as you do it. Okay. I'm getting a question from Mike. Primary offering of securities is being made for a company listed on the New York Stock Exchange. Prospectuses must be delivered. Okay. So if you have the answers coming, that's great. If not, we'll have a conversation. So if you have a New York Stock Exchange listed stock, that's an exchange listed security, there are 3 levels of days that the prospectus has to be delivered. Okay. It doesn't always mean IPO. So Mike said, primary offering of securities is being made for a company listed on the New York Stock Exchange. Prospectus must be delivered, and Mike's saying that to me, primary offering means IPO. It could be an IPO. Primary means anytime the issuer sells shares. Okay? Primary is when the company issues shares and they receive the money for it. If it's an IPO, it's the first time. Anytime after that, so say Google in 2004 issued whatever they did, and then 3 years later they issued more shares to get more money. That's a primary. So Spotify, what did they do? They did a forgot how they did that, but Spotify basically issued some shares. They keep saying they did it as a private placement. But again, on this test, think of it this way. If I'm the company and I issue shares and I'm the company and I receive money, then that's a primary, whether it's the first, second, third, fourth, fifth, doesn't matter. The IPO is the first time. So if I am going to, what do? I do an S1, I file the registration statement. That starts the 20-day review where you can't really talk about it other than issue at a preliminary prospectus and do indications of interest, and you can register it in the States. What you can do is a tombstone also. The tombstone is like an ad, like a little ad, very generic, just saying, hey, we're selling shares. And we can't have, you can't really have a price on it. You have to have you can have a range, but you can't have a price on it. Once it's effective, which is 20 days later, and the SEC goes, you know what, it can be lawfully sold. That's as far as they go. They don't approve. No regulator ever approves anything ever. So at the effective date, which is 20 days, anyone you sell the shares to, you have to give a prospectus to. So from that effective date on, there are a certain amount of days after that date that anyone who buys the shares from the issuer has to get a prospectus. So if it's an over-the-counter, which means non-exchange listed, if an issuer issues shares and it's a primary offering, whether it's IPO or an additional, if it's off the exchange, it's 90 days for the IPO, and it's 40 days for an additional. So again, I issue shares the first time IPO. For the next 90 days after the effective date, anyone who buys my shares has to get a prospectus if they buy it within the first 90 days. If it's an additional offering or a follow-on, then it's going to be 40 days after the effective date. That's for over-the-counter. OTC, that's bulletin boards, pink sheets, where they don't have listing requirements. It's kind of like the Wild West a little bit. Then now, if a stock is trading on the New York Stock Exchange or NASDAQ, either one of them, it's going to be 25 days. Only for IPOs. Additional offerings are not. You don't have any prospectus requirement for an additional offering because if it's on the exchange, it's being covered. There's research analysts watching it. Everyone knows it has listing requirements that it has to meet. So it's not as big a deal. So again, over-the-counter is 90. Additional offering is 40 on an over-the-counter. And a stock exchange, whether stock exchange or NASDAQ, if it's a listed security, it's 25 days. If it's an additional, then it's only nothing, really, no days at all. So, Mike, you said you'd remember it like this. So if you can help out, maybe there's a way people remember it. Can you double check the 45? Because it sounds, I always remember my joke always is that it's very biblical. That's why they do 40 days. Right. So I always try to remember like Moses was out for 40 days. That's how it's 40 days shows up quite a few times. So it's 90 for IPO unlisted, 40 for additional unlisted, and 25 days for listed. And again, you don't need a follow-on for the listed. So when Google issued the first time, it was 25 days. The second time, it was 0 because it's already listed, it's watched, and they have all that other stuff. So how are we all on customer accounts? Because that's so important on this. Like, do we know what you need when you open a customer account? When you open a new account for the first time, what do we need? So let's hear it. So, okay, tax ID. What's funny is that it actually says under the Patriot Act, you need the tax ID. But according to Finra, you just have to do everything you can to get it, which is interesting because there's not a single broker-dealer in the world that would open an account without a tax ID. So really, you need to name who they are, their address. Can I use name? Can I use a P.O. box? Can I use a P.O. box as my address? No. And the only exception is if you're in the military, because you can use a military. Right. So, yeah, look at that, Mike. You got it. If you're in the Army, you can do that. Okay. So I need, this is what I really need. Name, address. I need, try to do everything I can to get the tax ID. Don't actually need the date of birth yet. I just need to know that he's 18. She's 18. Why do I have to know if they're 18? Bueller, why do I have to know if they're 18? Right, no children. So under 18, they're not actually considered a person. So if you're young, right, so minors can't open an account. What if I have parental permission? Can I open an account with a 17-year-old? So I have a 17-year-old walking in, right, no, I can't do that. So my rule is it's never a good idea to be alone. No, see, here's the thing. That's not a joint account, Caesar. So what happens is if it's a joint, if you have someone who's 17, they have to open an UPMA account, which means the custodian opens up an account for them. On their behalf, they have to have a custodian. then they will try to trick you. It is not a joint account. Even with permission. Mom says, no, I'll sign anything you need. Doesn't matter. No children can open an account. The custodial account, UTMA, UGMA, is the parent or a custodian opening account for the child. But that's not a joint account, and it's not the kid opening it. Now, what is the age on UGMA versus UTMA? Yes, the custodian has to be an adult. And how many? Two questions for you. What age? And how many custodians can you have in an account? So 18 and 21, you need to elaborate on that. UGMA is 18. One custodian. 21, it's at least 21, but it could be up to 25 years old, depending on the state, right? So some states allow, I think Jersey is at 21, but I think New York allows it to be as late as 25. And what happens is each state is either an UGMA state or an UTMA state. If it's UGMA, it's regular securities and cash, kind of it. And it's at 18, it becomes the kids. If it's UTMA, it's over 21. It's between 21 and 25, and as late as you can do as late as 25. Okay. What if why do I need to know who they work for? Do I care who they work for? Okay, keep going on that. AML, you say AML, that could be true, because if the guy comes in, guy or girl walks in with a suitcase full of cash, well, if they own a laundromat, maybe it's normal. This is why KYC comes in. So KYC is know your customer. It's not the same as AML, but it helps with the AML. So if you know that the guy runs a laundromat or he's a club owner and he gets a lot of cash, he walks in with cash to deposit. Well, okay, we understand that, okay? Perfect. So AML says you need to know you're not helping finance terrorism. Right. So most firms require the employer to be recorded. So guy walks in and he's like a broker or a lawyer. Well, and he walks in with cash. Maybe that's a red flag. Usually you have to ask the person, where'd you get the money? And he has to come up with a legit answer. So what happens if he comes in with 11 grand in cash? What do you have to do? Okay, so I'm going to explain the difference between CTR and SAR. So a CTR is anytime somebody puts in 10 grand in cash, it's not a big deal. They do hundreds of thousands a day. It's not even a big deal. You go to a casino, pull out 10 grand, they're filing a CTR. That's not a screw your life up kind of thing. That's just a recording. If they're suspicious, right? So if they're suspicious, anything over 5 grand that's suspicious, it's a SARS. A suspicious activity report. Now, they give you almost 30 days to report that, because if you file a SARS, you're effing that guy's life up, effing that guy or girl's life up, because you're basically filing with the government, and they're either going to, they're going to either the FBI or the Treasury Department or whoever, they're going to go after this guy. And the other thing is, a CTR, you tell the person you're doing it. A SAR, you can't. So a CTR, you have 15 days to report it when somebody either puts in or takes out 10 grand in cash or cash equivalent. A SAR is if somebody does something wrong, and there's some limits. If it's under 5 grand, technically you don't do it, but any suspicious activity over $5,000, you're going to file it, and you have 30 days to do it. But again, you probably won't. On our level, we don't do it. It's usually us, the compliance guys and up that, who make the decision. All your job is to say, listen, this guy just walked in with 50 grand in cash and it was all wrinkled up and he wouldn't tell me how he got it. So you red flag it and then they make a decision. Okay. So now what's another reason I need to know who the employer is? The other reason I need to know the employer is if he works for a broker-dealer. Why do I care if he works for a broker-dealer? So when you guys all working for broker-dealers, or you're about to, when you go in there, you have to list all your brokerage accounts, all of them, okay? If you have to list all your brokerage accounts so that the broker dealer that you work for can track them and give permission. Because right now, as of last April 2016, if you have an outside brokerage account and you work for a broker dealer, you have to tell and get permission from your broker. We'll come back to that maybe, Caesar. So if you work for a broker dealer, they have to have permission. They have to give you permission to open a brokerage account at another firm. And the place, say you work at JP Morgan or Merrill or wherever it is, and you open an account at Edward Jones or TD, they cannot open an account without seeing permission from your employer, and they have to offer duplicate confirms and statements to all of the to the employer. So again, you work for Merrill Lynch, you open an account at TD, TD needs to see permission, and they have to offer confirms and statements to Merrill Lynch so that they can watch what you're doing. And yes, some of it's to prevent insider trading. Some of it's to see if you're front running a customer, like front running. I am about to give you my broker an order, and you go, hold on, and you run over to TD and buy the shares before I do. That's front running. You're running ahead of my order. So there's a couple reasons. One, we have to, as a compliance officer, we have to track all our employees where they have accounts, and we have to see what they're doing to make sure that they're not front running customers, trading in misinformation, or any kind of stuff like that, just to make sure they're not doing anything wrong. That's one of the bigger reasons that you need to know if the person works for a broker dealer. Like I just went to open up a Robinhood account, figured, you know what, no commissions. I got a thing back saying, well, we can't move your account forward until we get permission. So I have to take a picture of a written permission from my firm and upload it onto the website. And then I can open the account. Other than that, I'm fine because I already have permission. I just have to send it. On that note, the other part of reasoning you want to know if a guy works for a broker dealer is because if you do a common stock IPO, people who work for a broker dealer cannot, your turn, answer. What can a person who works for a broker dealer not do? He cannot buy cannot buy common stock on an IPO. No, you're right. Cannot buy common stock IPO. He can buy preferred. He can buy bonds. He can buy additional offerings. Cannot buy stock on an IPO. Boom. I knew you meant that, Caesar, because I said, what can you not do? Good. Okay. So we cannot buy stock on a common stock IPO, but anything else we can. So we need to know if he works for a broker dealer so that he's called restricted. Okay. And oh, good point. Okay. So the question was, what can a person who, because I think you jumped out and in, what can a person who's employed by a broker dealer not do? And the answer is he cannot buy in common stock. And right, Derek, it's also his immediate family, which means like brother, sister, if they live in the house, parents. I always think of this as immediate. One up, one down, one over. Parents, children, and their brother and sister. But what happens is that if they're fully independent, like I had one of my students, he was a CEO of a major broker dealer, and his sister, he was from England, and his sister lives in England. And when I told him the rule, he started freaking out because his sister basically buys on IPOs all the time. But I said, are you paying her bills? Are she paying your bills? She's not living with you. So she's fully independent, so they would probably let it go. But immediate family is kind of living in the same household. So again, cannot buy in an IPO, common stock IPO, I can buy everything else. That's one of the main reasons. And so now all of you who work for broker dealers or mutual funds or money managers or hedge funds are considered restricted, which means you cannot buy in common stock IPOs. Fair enough? I like it. Okay. Now, on the SIE, they're not going to go too heavy on options. They will absolutely have option questions, but they're not going to go like crazy heavy with that. What they're going to do is they're going to ask a couple of things like, what is Sure, I'll talk about hedge funds. So options, they're going to talk about what you can and can't do, like what they do. Are they hedging? Whatever it is. They're not going to go deep. They're not going to go heavy math. Maybe you get 1 or 2 questions. But for the most part on this test, options and margin are going to be lightly touched. They're going to be heavily touched on the top off 7. If it's a 6, they may talk about it a little bit. So again, SIE, lightly touched options and margin. If it's a top off, they're going to go heavier into it. Like they're actually going to talk about, they're going to go into the hedging. So most people are probably taking the Series 7 top off, but I don't want to just sit there on that. And that's not what this one is about. Maybe in the future I'll do some top off stuff, but not tonight. So light options, light margin, just get the basics down. Just focus on the customer account stuff. That's most of it. And the regulations, because that'll save your ass. Sorry, but that's the way I do. So now, if you understand the basis of options, you understand the basis of margin, that it's leverage, you're going to be fine. Now, hedge funds. So if we know what a mutual fund is, which is like, it's like a pooled investment for, like, basically we just have a shell that we put securities in there, and the value of the securities drives this up or down. If anyone can buy that, it's very liquid, we buy in and out. Mutual funds we'll talk about another night. A hedge fund is the same thing. It's a packaged good where what they do is you're buying shares, or it's really a private placement. So you're buying a piece of the shell that owns the securities. So the hedge fund is a packaged product where they buy and sell securities inside the shell, and you're buying shares of the shell, not the securities. But here's the thing, not everyone can do this. These are for rich people, accredited investors. And the way to remember accredited investor in my world is I go 1, 2, 3 accredited. 1, 2, 3 accredited. They either have to have $1 million net worth, 200 grand salary, or 300 grand salary if they're unhappy. I mean married. I'm just kidding. If my wife's watching, I apologize. So 1 million, 200, 300,000. Any one of those 3, they hit the accredited level and they can buy on a hedge fund. So a hedge fund, again, they have a manager who buys alternative investments, kind of strange little things that you never heard of, where they invest in ways outside the norm. A lot of the stuff is illiquid, which means you're buying things that are hard to get in and out of. So it's easier. So it's easier for you to invest in this than you buying each little product. Like they'll buy a bunch of small companies and help them grow and take them over and stuff like that. But they're called hedge funds because they find alternative ways to hedge the product. So if they buy a bunch of strange things, they may buy like a certain option or some sort of alternative investment that offsets the risk here. So remember, hedge funds are unregistered investment companies. They manage a portfolio. It's not liquid, very hard to get in and out of. Very hard to get in and out of. Like one of my friends who does it, he said, you say you want to get out, you file a redemption. After the next quarter, then they start working it out. So I place an order to redeem it today. It could take until July or August for me to get out of it. Because again, they're buying very illiquid, not tradable stocks. So for them to have to dump the shares of that stock to get you the money, it might really adversely affect the price. So again, they are very illiquid. I can't say that more than enough. They are risky, but they do hedge their bets a little bit. And rich people buy them. 1, 2, 3 accredited. 1 million, 200, 300 accredited. Now they issue in what they call a private placement. So that would be called on this list level called a Regulation D. A Reg D is an exemption to what we talked about in the beginning. The Act of 33 covers IPOs and registration. Reg D is an exemption to that, which means it's a way around it. Reg D is a way around the Act of 33 because you're only selling from the investors directly. Did I say investors? Yeah, it's tired. I get in at 3 in the morning. So it's from the issuer directly to the investors. So I want to raise, like, say I want to do my tutoring company, capitaladvantagetutoring.com. You want to check it out. Capital Advantage Tutoring. I want to raise money, and I need some money to do some stuff. Maybe create better videos, whatever it is. So, but I don't want to register because I don't have the money for that, and it takes too long. So what I will do is I will hire some people to sell this directly to certain investors. And a Reg D, there's no limit to how much money I can raise. I can raise hundreds of millions, but I don't register. But what I do is I only sell to one type of person. What type of person do I sell it to? I should have the Jeopardy music. What type of, oh, I almost just said it. What type of investor? There's a certain type of investor that we can sell to. So tell me what type. Yes, an accredited. So you can sell to an accredited. But okay, so how many accredited can I have? Is there a limit to how many accredited I can have? Ah, see, I tried to trick you. Unlimited accredited investors, up to 35 non-accredited. It's a trick question. It's late at night. I can pull this off. So accredited investors are what the 1, 2, 3. I can have as many as I want, but up to 35 non-accredited. So and that's like I call it the friends and family. We're letting them in, but it's not. We're really not selling to them. We're selling mostly to accredited investors. Now I'm going to finish up soon, but I can probably do this, every few days because I don't mind doing this. What's another exempt security? What's another way I can sell shares and not register with the SEC? There's two others that I'm thinking of, and you should be able to read my mind right now. Okay, so in state, right? Okay, so munis are exempt as a security. Okay, fair enough. I set myself up for that. So I want to sell what I do is I want to sell a security that's outside the realm of the Act of 33. It's fair as municipal. I suckered myself into that one. So I'm thinking of I'm a corporation, not a municipal, not a treasury. I want to sell a security and not register it. Caesar had one of them. It's a state. Do you know what rule number that is? So if I register in one state only, yes, Rule 147. Perfect. Rule 147 is the in-state offering. That means all my investors are in one state. I always explain it like that's what Ben & Jerry's did in Vermont. They didn't want to go through the state SEC registration, so they just sold all their investors are from one state. Now, that's what that is. Every investor is from one state. 100% of your investors. Now, that doesn't mean you can't sell your product outside the state. There's some limitations on that isn't really on this exam. But you usually around 80% of your stuff has to come from inside the state. Yeah, I'm talking fast. 80% of your products and your revenues should come from within the state. There's some wiggle room on that and some of the type of 147 offerings. But in your mind, think most of it has to come from inside the state. 147A allows you to a little more wiggle room, right? So again, 100% of my investors are from in the home state, and then I have to hold off for how long before I can sell it out of state. So I issued Capital Advantage in New York only. All my investors are New York residents. Now one of them wants to resell it to somewhere else. 6 months, right? The old rule is 90 days to sell it to another investor, but they kind of got rid of that. So you have to hold the shares for 6 months, then you can sell it to anyone you want. Boom. Buy it. You buy my shares. You guys can send the checks to my house. That's fine. Buy the shares. And then you wait 6 months, you can sell it to whoever you want. That's one of them, the in-state. That's 147. The other one is Reg A, which is a little confusing because nobody's really sure if they're asking about A or A plus on the exam. So I'll give you both. Reg A, think Reg A, small. It's for the smaller investor. First letter, small, little a. Reg A is the regular Reg A, is if you're, I as an issuer, I'm going to sell under $5 million worth of stock. Boom, SEC doesn't care. It's too small, nobody cares. $5 million is nothing to them. To me, that's a lot of money. To them, it's nothing. So under $5 million or less, you don't have to register with the SEC. They added one through Dodd-Frank called A+. It's a little different, but the numbers are higher because they found out a lot of people weren't selling A shares. So what they did was they created an A+, which means you now have up to $20 million. You can raise tier 1, Reg A plus tier 1 is up to $20 million. And there's some rules on there where you can have accredited and non-accredited, as many as you want. And then Reg A plus tier 2 is up to $50 million. And they have some other restrictions, like you can have up to 35 non-accredited, but you can have as many accredited as you want. Just understand the basics of this. So let's say I want to issue shares and not go through the whole Act of 33. Okay? So let me go back. I'm going to go through the whole thing. If I want to do a private placement, that's Regulation D. That's an exemption to the 33. If I want to sell only in one state, that's 147. That's its own thing. There's another way called Reg A. There's Reg A, which is $5 million or less. And then there's A+, which is the higher tiers, 20 million and 50 million. So again, Reg D, private placement, Rule 147, in-state, separately Reg A, and then A+. The fourth one that nobody ever talks about is Reg S. If I am a U.S. issued bank or broker, not broker dealer, issuer, and I issue shares in another country, I do not have to register with the SEC. If I issue shares in another country under Regulation S, then I don't have to register it with the SEC. As long as, if it's equity, no, you don't, it doesn't get resold in the U.S. for 12 months. And if it's a bond, for 40 days. Ooh, that 40 days comes up again. So you can't, so if you sell under a Reg S, which means issued outside the country, like Apple can do that. They can issue bonds in another country and they don't register with the SEC. As long as, if they're bonds, as long as nobody resells back in the U.S. to U.S. residents for bonds 40 days, stock 12 months. Okay. I'm going to try to do another one later in the week, see if it works, because I think it helps people. And the only reason I can't go too long is I have to catch a train home. And I got in at 3:30 in the morning last night, so I'm exhausted. But I would like to try to do this again. If you guys think this is helping, let me know in the comments and subscribes. I can do one more quick question if you guys have one. Or I can go to bed, and that'd be really nice. That's okay. Okay, so I'll try to help. Guys, listen, the SIE, one thing. Okay, that's fair. I'll do that one. I'm going to do a difference between listed REITs and untraded REITs. They're not the only difference is the liquidity. So, and then I'll let you go. So a REIT is, again, it's a package where they manage a portfolio of securities. It's traded on the exchange, okay? So that's a listed REIT. It just trades just like a stock. You buy and sell it, you short it, all that stuff. Very liquid. An untraded REIT, yeah, I'm a nut job. My wife gets mad that I won't stop talking. So an untraded REIT is one that's not on an exchange. So it's not liquid. It's the same thing. It's still this. It's still a managed portfolio of securities. But what happens is it's not liquid. That's the big question. AS, I don't know who the name is. You said your test on Saturday. How you doing? I mean, how you scoring? Have you tried the Finra exam on the website? Look, if you don't want to say it in public how you're doing, feel free, send me a message. I think my email's somewhere on there. You can go to capadvantagetutoring.com. You can probably contact me through that. That's fair enough. I'm actually going to run now. So if you guys have any more questions, feel free to shoot me emails. I'll try to answer them. I am running a tutoring business, so I can't go crazy on it, but I will try to keep helping out. I kind of want to help with the SIE, get people started and see what we can do. I am trying to build my brand a little bit. Yeah, I'm a 50-year-old guy saying the word brand. It's fine. If you guys think I'm helping, please share. Please share this with other people, because the more people I watch, maybe I can do some more stuff and build up my. I've gotten a couple students from this, which is fine. That's not why I'm doing it. I have a lot of students on my own in the city, but if anyone needs help, please come at. I'm not going to pitch it. I'm going to do these for free because I really am trying to help people out. It makes me feel good. It's an ego thing. Have a great night. I'm going to try to see if I can figure out a way to post this as a vid, but I think it's kind of long and they may not let me. But again, anyway, have a great night. Yeah, because of this. By 10 people. Right. Okay. Yeah, fine. Send me Diet Cokes. I'll be happy to do that. I drink like way too many a day. Hey, guys, have a good night. And I'll try to do one. If I can do one Thursday or Friday night, I will try. But I do it from home, and my kids will be pissed at me if I do it at home. Thanks a lot. Have a great night, guys.